everybody doing today? You magnificent melon heads. Good morning, Mish.
Ahoy, akosamash for the Slovenians out there.
Wow, we're going multilingual today. That was not planned. How you doing this morning, Mish? Besides his 2 second delay, I guess he's doing all right. By the way, just
You
want to
know,
say
there's
hi to all the regulars in there. Hi, Mom. Hi, Dad. I love you guys. I hope you're doing well. So markets are higher. They're sharply higher this morning. I guess that's great news. I guess all this economic turmoil is behind
all right.
us, right?
Hey, just so you know, I've got an extra volume in here. I am hunting down. Give me just a second. I think I may have found it, and I am back. Go ahead.
All right, Mitch is having audio issues today. Well, that's the trouble when we're trying to remote people in. I'm out here in Pennsylvania, and Mish is where is Mish right now? Hashtag where's Mish?
I'm in Norfolk, Virginia today.
All right, it's home of the Navy's in Norfolk, right? Isn't that the big shipyard is in
It
Norfolk?
is second fleet's here.
All right, yeah, that's me. Um,
Yep.
all right, so everything's up today. Market sharply higher.
Yeah.
I guess all this economic turmoil is behind us. I guess we can just go
You know,
about our day.
everything's rosy.
Yeah, yeah.
Your boy helped push gas prices down about 60 cents over the long weekend so people could travel. Funny thing about gas prices and commodities in general, when you artificially push the price down, what happens afterwards?
Mm. The correction tends to be
Yeah.
swift and violent, and we are actually artificially pushing the prices down right now. Remember, we're dumping 4 million barrels a day from the Strategic Petroleum Reserve right now. So
Yeah, we actually had a 50 million barrel release on Friday.
50
They
million.
announced. And yeah, so I know I just realized I'm dumping this on you. So, hey, live TV. Um, Yeah, so they right before the long weekend started, they dumped a huge amount of crude on the market, and they had been kind of advertising it to players and helping push the price down after the fact. We heard and learned this. They had been pushing the price down low enough to get into the gas prices. So gas starts getting pushed down, even though it shouldn't be going down by any right. We had been talking about this last week.
Yes.
So gas is unnaturally low based on supply.
You know,
So we have a little bit of demand destruction.
I always thought
Go ahead.
SPR stood for Strategic Petroleum Reserve, and apparently it's actually Strategic Political Reserve, and that the reason for the SPR is not anything to do with having an emergency supply of fuel for the military in times of war, which, we'd never be off to war, right? It's not like we're being marched off to war right now. Uh, no, it's actually there to save a president's poll numbers. That's why we have the SPR. It's so we can flood the market with oil right before elections so that one particular party doesn't get just chewed out in the midterms. I always thought it was the military thing. I was way off, apparently.
Hey, hey, everybody in chat. Good morning. I'm not going to sit there and try and type everybody today, or else you'll see this all day, and I don't think you want to see me going up and down. So, good morning, everybody, especially the neighborhood cat lady.
All right, speak.
Oh, dumb money's in.
Hello, dumb money. How you doing, King Money? Boy, my messages are slow to load this morning. But let's take a trip to the indexes while we're here. All right, we are looking at S&P 500 futures, and it looks like the S&P is set to open about 1.5% higher. That's 55 points. Dow set to open 400 points higher, about
That's crazy.
1.37%. Good day for the Dow.
I'd like to say hi to Ortwin and Sage.
What's up, Andrew? What's up, Sage? Good to see you guys. And the NASDAQ up 175 points right now, 1.55. The NASDAQ leading higher. This is a risk-on move again. Don't get it, but that is what we've got going on right now. Looking at the commodities world, gold down just $1.85. Silver's actually up 20 cents. Most of the base metals are higher. Energy appears higher across the board. We've got crude is up by $2. Crude just got absolutely obliterated last week. Well, now, after Mish, what you had mentioned, this big dumping from the SPR, the Strategic Political Reserve, now I understand the beating that oil took, and now that the long weekend's behind us, I guess we can just go back to higher oil prices. That is right until what 2 weeks from now when we get the Fourth of July holiday. I guess we'll have to do that again.
Yeah. Now, what is the last time I checked? We were down to about 500 million in the SPR. So that was a 10% release for 3 days of lower prices.
Yeah, 10% of our military's emergency fuel stockpile. But you know what? If it gets Brandon another 2% in his poll numbers, I think that's well spent, right? I mean, our guys can run out of gas in the field as long as Brandon's numbers are a little bit higher. I think we're good.
That's right, John. John DiNardo, the SPR save political ratings.
Save political. I like that. That's pretty. All right, we're waxing a little too political this morning. I apologize. I know I say I don't do that here, but every now and then it's tough for me to keep my mouth shut. Also going on
It was
today.
my fault. I started it.
Yeah, I blame you, Mish. It's all your fault. Also making news today, or not making news, but it's noteworthy to me. Agricultural commodities significantly lower. We got wheat futures down $14 or 1.36%. Corn futures down 15.5 or almost 2%, and soybeans down 1975 or 1.16%. We got, it looks like these high temperatures that are headed to the east. If you're on the U.S. East Coast, you know there's 100-degree heat coming your way. This ridge that we talked about late last week, this stubborn hot weather that had been parked over the U.S. Midwest. Remember the story about the cows suddenly dying in Kansas? Well, that heat has finally broken loose. It was just sitting there for weeks, and it looks like it's finally starting to head east, and that should bring some relief to the Corn Belt. Emphasis some. They're not calling for rain. They're just calling for slightly less ridiculous heat. And I guess the market was starting to build some yield declines into those prices because of that heat. Now that that heat is moving on, the market is starting to pull some of that off. So the prices are dropping today on that news. Don't think it's any major change to the long-term food shortage story, but it is an input to prices right now. So keep your eye on the weather over the Corn Belt. That's going to inform agriculture prices right now. And let's see what we got here. The U.S. 10-year Treasury right now is up about 5 basis points or 1.5% after a steep sell-off last week. We were as high as almost 3.5, right? What did we peak at last week? Did we go to 3 point? We went to 3.493 last week before selling off hard over the following couple of days, back down into the 3.2 range. Still much higher than I thought we did.
While we're here, have you been watching the yen over the weekend? It has it got up to 136 this morning.
Yeah, the Japanese yen is at its low against the dollar. What is that? The lowest since 1998, I think. It was.
Yeah.
Yeah. So the Japanese central bank, the BOJ, is basically engaged in full-on yield curve control. Let's bring up the Japanese bond while we're at it. And now, if you don't know what yield curve control is, it's very similar to quantitative easing in that the government prints money. But in quantitative easing, the government says we're going to print so much money every year or every month, like we were doing $30 billion a month for the better part of a year and a half. Well, with yield curve control, they say we are going to achieve this interest rate on our bonds, and we'll print every dollar necessary to achieve that rate no matter what. So it's basically quantitative easing on steroids, and that's what Japan has been engaged in. They've been trying to peg their 10-year yield to 0.25%. They've been desperately trying to hold the bond there. Well, lately, as the U.S. tightens and as interest rates worldwide go up, there is a tendency for the Japanese rates to go up along with it. And the Bank of Japan has had to print increasing amounts of yen to hold this rate down. And you can see last week, you see all these spikes here. And I remember the text I got from Mish right in the middle of the night. I was passing out. The Japanese look like they're losing control of that, or at least there's momentarily they've lost control of it right before printing more yen and suppressing that price down. So, as they're having to work harder and harder to keep that rate suppressed, well, what does that do to the value of their currency? Kills it. So the Japanese yen is at a 30-year low against the U.S. dollar. And looks like even right now as we speak, Mish, the 10-year Japanese yield, it was below 0.25 right before I started this stream. I did double check right before we started the stream. And just since we started talking, it's back at 0.33. So whatever just
Yeah.
happened, markets just opened. Japanese yields heading higher. They're going to have to
So
print.
my theory is that the Japanese bank, central bank, BOJ, has said we are going to, hey Nigel, we are going to print and buy every bond that we have out there at a quarter. So no matter what the price is, we're going to pay a premium for it. They own a little over 50% of their own debt. So they're going to continue buying until they own 100% of their own debt.
And they will.
And then that is when the fireworks start.
Yeah, they will own 100% of their debt, right? Because if you own a Japanese government bond right now, you're yielding 0.3%. Why would you hold that when you can go buy a U.S. bond that's lower risk, if you ask me, and it's yielding
For
10
three
times
times the
that,
yield.
10 times the yield, right?
Yep.
3.3.
Yeah, I'm sorry, 10 times the yield. Yeah.
So yeah, the Japanese government, they're going to end up owning all of this, and you'll hear phrases like bond vigilantes, which is basically bond investors dumping their bonds. They don't want any part of this. So that's the bond vigilantes dumping their bonds is tending to send these yields higher, and that's causing the BOJ to come in and buy even more. And it is, you
Right.
hit the nail on the head. It's going to end with the BOJ owning all of the debt. It's not going to end well for the Japanese. We've seen this before in history. It never ends well, never. And Japan is the world's third largest economy. This is a big freaking deal. If this blows, this is going to be a very big deal.
And what they're saying is every time this spikes up, they're just proving that they are continuing to do this. So the spike is just a showing how many people are selling, and the BOJ just continues to buy.
Real quick, I got Mr. Mike
And
Bender,
go ahead.
whose name I got right today. Mike Bender from Robin RC Models says, "What if the release of the oil reserve is just the same as the Fed actions, steering sentiment rather than really affecting anything?" Almost like jawboning, Mike. Thank you very much for your support of the channel, for your super chat. Really appreciate that. You're right. There is a certain amount of jawboning going on there. Just the act of the president's people going on TV and saying we are going to release more oil ahead of the big holiday weekend, just that can cause sentiment to shift and can cause a sell-off in the futures before the oil is ever even released from the preserve. So you're absolutely right. There's definitely an element of jawboning going on in oil markets there. But much like the Fed, the more jawboning they do, the more games that they play, it affects their credibility. And that is not an infinite pool that you can draw from. If you constantly draw on your credibility for jawboning markets and moving them around, eventually that's not going to work anymore. It's going to have a diminishing effect, and the Fed is going to start seeing that soon. And I think that we're going to start seeing that with the SPR also. The SPR, I mean, like Mitch just said, they just dumped 10% of it in one weekend, and they're supposedly going to keep dumping a few million barrels a day all the way through the summer and into the election, just to get themselves through the election. Well, then what happens? Then they have to replace the SPR. Then they have to buy back that oil because we need the SPR for our military, especially because the next thing they're going to do to save their poll numbers will be march us off to war with Russia or China or whoever. So they're going to have to replenish that oil inventory. So everything they're doing right now is just at the expense of oil prices next year. But thank you very much, Mike. I appreciate the super chat, sir. I appreciate very much the support of the channel. It is 9:29. We're 1 minute away from market open. And real quick, I just wanted to mention the MMRI, the Manarino Market Risk Indicator, still in high-risk territory at 214. And the MMRI is at 276. And, folks, as much as I get this, I see this on Twitter all the time. I have to remind everybody, I don't run this website. I don't know who runs this website. I didn't create the pressure gauge indicator, so when it gets pegged at 280 or above 250, I agree we need a bigger gauge, but I don't run this website. I don't have any control over it. So just throwing that one out there. But, in defense of this pressure gauge, I never thought the MMRI would ever get this high. I would have thought we would have had a major, major implosion in the debt market before this happened. Now, we already got it in stocks.
Well, I mean, we are.
Stocks are down 20%.
We are having a major implosion in the debt market right now. the burn is so slow that the risk indicators are not keeping up with, or I'm sorry, the burn of the equity market is not keeping up with the risk indicators.
And if you look at the S&P, you could argue that the crash has already happened. Can you guys see this chart all right? Let me make sure you can see. Well, I got to move it even more. I mean, here's the S&P 500, right? I mean, look at the depth of this sell-off since the start of the year. It's as big as the sell-off after COVID. So, I guess you could argue that the crash has already started, right? I mean, we're down over 20%. We're approaching the 200-day moving average. We have a lot further to fall this time because of this blow off top, as you put it, Mish, before we started. Before we get into the
Yeah.
blow off top, though, let me. It's 9:31 now.
Hmm.
Markets are open, so let's look at the indexes here. We have got the S&P has opened at 3734, up 60 points on the day. I got to get the Dow open. When we switch from the futures to the indexes, it takes just a minute. All right. Where's the NASDAQ is open 152 higher, or 1.43%, currently at 10,993. Oh, 195 higher. NASDAQ just made a nice step change higher while we were talking here. And where is
Look
the
at that
Dow?
buy signal.
Yeah. So it is a here's the Dow. Let's see what the Dow's doing. Dow is up 401 points, or 1.34. So NASDAQ leading the way higher. Now at 11,000, back over 11,000 for the NASDAQ. Again, I don't buy this. I still think much pain ahead for stocks, whether we get these short-term relief rallies or not. The overall tide is still going out. Things are heading lower. We are heading towards a recession. Maybe we officially enter a recession starting in the second quarter. Maybe not. That's all going to come down to inventory, whether or not inventory is this growth in inventory, which looks like business investment in the GDP calculations. That may actually create the illusion of economic growth when really it was just purchasing managers bought too much stuff because of what happened in the debt market and what happened in the supply chain. So
Looking at the numbers, I'm starting to think that we're starting to see a flattening out of that over the last 6 to 8 weeks. So I don't think it's going to be as big of a problem as it was in the first quarter. So I think we're going to see a true startling number on GDP.
yeah, well, I mean, the consumer is definitely being absolutely clobbered right now by inflation. Right, consumer spending,
Hmm.
consumer sentiment is lower than it's ever been. I think in the history of the indicator, consumer sentiment is lower than that. And we've been talking about on
Yeah, I
this
think it's
channel,
tied for the low.
tied for the low. And what was the previous low was like 1974, like the last time inflation was running away.
Yeah.
People have no money left over. They buy food, they buy fuel, they pay their rent, and there's nothing left over. Right? And that's going to translate into mass layoffs, because any company that sells anything other than food and energy is getting squeezed right now. Their margins are being squeezed. They can't raise their prices because the consumer has no money, but their operating costs are going up, so they're having to lay off employees. They're having to reduce their operations. That means fewer people working. Fewer people are working. Now there's even
Yep.
less consumer money in the economy. Now people aren't paying their rent. Now there's foreclosures happening. So,
I think it may have been Robin that put this out. So let me know if that is true, Mike. So I'll give you credit. Said something about a luxury guy, hotel manager. It was the highest percentage of cards that did not go through this weekend he's ever seen.
I believe it. What was the chart? The consumer credit. Let me see if I can bring that one up. The St. Louis. Here we go. This chart. Oh man, I gotta really shrink us here, Mish. We're gonna get really small here. This is consumer loans.
It is kind of cold outside.
It's a family show. All right. Consumer loans, credit cards, and other revolving plans for all commercial banks. All right. And this is going all the way back to 2002. And just want to zoom in. I'm not surprised to hear that anecdotal case of credit cards getting declined because right now consumer debt is actually higher than it was at the start of the pandemic. And if you recall, at the start of the pandemic, we were in the early innings of a debt crisis. Actually, we were almost a year into a debt crisis, a year into a liquidity crisis. And then we locked everybody up. Nobody could spend any money because we just didn't let them. You can't go out. You can't go on vacation. You can't do anything. And then we gave everybody stimmies. So they paid off their debt. And then as soon as the lockdown started to ebb a little bit, as soon as we started to let people go back out, which was very nice of our government overlords to allow us to go out to eat and to allow us to fly and things like that again.
That was very nice of
generous
them.
Yes. Now all of a sudden consumer debt is heading higher and higher. Well, now we've got an inflation problem too. Nobody has made any adjustments to their standard of living. They're just putting it on the credit card. And look, this line doesn't show any slowing, does it? I mean, we're just up and to the right on consumer debt. Well, eventually those credit cards are going to max out. And, you know, this anecdote about the guy at the luxury hotel in New York and all the credit cards being declined, I'm not surprised to see that because everybody's living off of their credit cards right now. That doesn't end well. It's not going to go over well.
Yeah, you know, we've been talking about this for a couple months. I don't know how much online we've said about it. But, and Mike did say it was him. Thank you, Mike. That was on Twitter. And for everybody, we don't say this enough. Jack and I both spend a lot of time on Twitter sending stuff back and forth, news stories and information back and forth. So if you want to catch in on that stream, you're welcome to follow us and kind of get on our thought process.
Yep.
But
I think our Twitter is
it's
right down here in the corner, all the way down there in the corner. Right below you, you'll probably see a link to my Twitter feed. And you can find Mish. Mish is at Mishner on Twitter.
It is not Mishner on Twitter.
Oh, that's right. You're Cinder.
Uh-huh.
Yeah.
So my name has a story behind it, but mine is at Cinder Smackhead. And the story is my daughter's, so if you ever meet my daughter, you have to get her to tell the story.
Well, I'm bringing you up, Mish. There he is.
Okay.
There's Mish with the silver baby Yoda. Silver Grogu.
In general, always look for the silver baby Yoda in my you'll always know it's me on media, unless you're on Discord.
And I am JG Nuke. There's me. There's my melon on Twitter. All right.
So anyway,
here's, real quick, I got Miracle Oil send a super. Thank you, Miracle Oil, very much. Says, what'll you do with XLE now? Add or sell? I still have a position in XLE, and I haven't done anything yet, but I'm this close to adding. And did I miss that window? I don't know. Let's look at the XLE chart real quick, because, again, everything that they're doing with the strategic political reserve is going to come home to roost. And, I mean, look at that sell-off last week. Give me a break. Give me a break with that sell-off. Doesn't pass the sniff test. All right, let me set this to a one-day candle. And I'm trying to see, when is the last time we had a sell-off that big? I mean, this sell-off is even bigger than the sell-off we had in the when Omicron hit the tape. I don't know if you remember that. That was what, October, November timeframe when Omicron came out? And I remember saying that didn't pass the sniff test. And that's when I first really started piling into oil. So, I mean, this is just screaming buy to me right now. Between the dumping of the Strategic Petroleum Reserve, and I think a little bit of this might be futures traders are starting to price in major demand destruction, which is coming. There is demand destruction coming. But I think there's more supply destruction coming than there is demand destruction, because our leadership is not done making this thing worse. They're just not. They're going to keep making it worse. They're doing everything they can to make it worse, and they're telling us you're welcome while they do it. So I think oil goes a lot higher from here. I still haven't added to XLE. I do have a position in XLE. I'll probably add. I got to spend a little more time studying the chart. But this just looks really oversold.
What was the number on March of 2020?
The number on March of 2020.
Where was it at?
What? Oh, the low?
Yeah, well, just where was it at on March 21? Yeah.
March of 2020, oil bottomed around $23 a barrel. Oh, no, I'm sorry. This is XLE.
Okay.
I'm sorry. This isn't.
XLE. Yeah.
Yeah, this is XLE. This is the oil stocks. It bottomed around 23.
Okay, thank you.
Now let me
And just
bring
going
up the
back to what
oil
we were
chart.
talking about.
Here's the
Yeah.
WTI chart. All right, 110 a barrel. No way it stays here. Let me open this. Make
Mark
this.
and Jeremy, I'm going to talk about that in just a second when we're done with this.
And where are we? Give me a big chart. And give me 1 day candles. There we go. I mean, look at that. Look at that dip last week. All right, and this is, yeah, it was as big. Here's the oil variant. I don't know if you remember that story when Omicron broke. I called it the oil variant. And look at the sell
Mm-hmm.
off the last week or so. It's as big of a sell off as we got with the oil variant. Why? Off of a dumping of the SPR. There was no good news for oil last week. There was no reduction in consumption. No, I think we're heading higher from here. I think we head a lot higher from here.
Gasoline went down, stocks went down worldwide, but yet the price went down. There was no reason.
Remember, Libya is offline. Um, yeah, and with let's just say the geopolitical risk is going to get a lot worse before it gets any
Mm-hmm.
better because we're starting to see more widespread civil unrest and violence and things like that within a lot of these oil producing
Yeah.
countries.
Yeah, I'd like to address something before you take Mike's super chat.
Go ahead.
So, a couple people are talking about what the Iranians did in the Strait of Hormuz. So, the Iranians took a couple of their small boats, which is ironically what their navy is. Their navy is 80 to 90% of small boats. They really don't have power projection. So, they're what you would call a regional navy. And they love to harass our boats over there. They do it all the time. This one was more important because they caused the United States Navy to go into their procedures and actually fire a flare. So that's deep enough into the protocols that they had to launch something. And that is a report that has to be made all the way up to the Admiralty and becomes a diplomatic issue. So it's not just harassment, it's that next step.
And when did this occur?
And that's why it becomes important this morning.
Oh, I hadn't heard of that story yet this morning.
Yeah. So that's why I'd like to say something about it. They're starting to take that next step of poking at us. It's been a good 10 years since they did stuff like this. They swarm us all the time and they yell at us and they're on the radio and they're getting close to us. They usually get off our butts, if you will, before we have to fire a flare or something. So that's why this is a little bit different.
It's an escalation. It's a minor one, but it's another escalation.
Right.
And
so you have the Chinese building 1,000 schools in Iraq. You have the Houthis over in Saudi that are being financed by Iran. And then you have the missiles being launched. Israel is now really getting into Iran. And the Saudis are complaining that we're not doing enough to control Iran. So there's an escalation going on over there.
I don't want to give away too much, but got to send a shout out to Keenan Haywood. I don't know if he's on this stream or not, but Keenan had the idea that on the next Patreon Zoom meeting that we all come with our doomsday scenario predictions, like our triggering events. What is the event that pushes us over the edge from this downtrend sell-off to full-on like economic doomsday, I think was the word he used. And what you're describing is very similar to the scenario I'm ready to talk about tomorrow on the Patreon Zoom meeting. Link in the description below if you feel so inclined. Thank you very much to all my Patreon supporters, guys. Appreciate it. I couldn't do this without you. But I hadn't heard about this story in the Strait of Hormuz, and it's interesting because I was just playing that scenario out in my head last night and today. So, wow.
All right. Mike's got a super chat in.
Hey, Mike Bender says from Robin RC Models, wonder how the credit card rates are doing with the U.S. 20-year heading for 5%. They're going up. Credit cards are adjustable rate debt. It's important. Also, we had the highest weekly put-to-call ratio in 20 years last week. All right, so the put-to-call ratio. But first of all, let me go with the first half. Credit card debt is adjustable rate. So when rates go higher, credit cards get more expensive. So keep that in mind if you have that friend or that relative that is always struggling with credit card debt. Get on the phone with them and warn them about what's coming because these rates are going to keep going higher and their debt is going to get more expensive and those minimum payments are going to go up and they're going to keep making the same payment every month and their balance is going to be getting bigger. So it's important for them to keep an eye on that. Um, Also, now he says, also, we had the highest weekly put to call ratio in 20 years. So the put to call ratio, that's your greed, your fear index, right? If you're of the contrarian persuasion, which I am, when you get a really high put to call ratio, that means the market sentiment is overwhelmingly bearish. Usually a good indicator that it's about to shift and that this fear is going to pivot to greed very soon. So when you get a super high put to call ratio, like the highest in 20 years, like Mike is pointing out that we had last week, you can use that as another indicator that we may be headed for a dead cat bounce. Just so those puts get squeezed out, market corrects a little bit upward, and then resumes its downward trajectory. So that's thank you, Mike. I appreciate that. That's a good data point, and it is important to
Yeah.
keep an eye on the put to call ratio. All right, there's one more.
So we have some SCOTUS opinions dropping at 10 o'clock.
Okay.
Just so you know, I don't know how you want to do it with that.
I haven't been following what's going on in the SCOTUS right now, other than the one
Neither have I.
fiasco. So we're gonna leave that one alone.
That's why I said. Okay.
Couple things I want to mention real quick, guys. I know we're getting a little long in the tooth here. This video just came up on Twitter today. 7th day of a general strike in Ecuador due to price increases and inflation. Ecuador has some widespread rioting going on right now. It appears to be inflation related, cost of living increases, energy prices getting too high. I'm sure there are pre-existing political problems that are coming to the surface now, but this is just something that we keep seeing over and over again. More civil unrest, more social unrest. This is in South America now. We've seen it in Sri Lanka. Where else did we have it already this year?
Already this year, man, we've had what? Sri Lanka, Ecuador. There was some in Brazil.
Yeah. So this is going
A
to
little bit of Egypt.
This is going to become more commonplace. When it gets too expensive to eat, people get pissed off. All right, and I hate to see this, but unfortunately, this is going to be probably more common. And yeah, I'm not going to read through the whole article, but this was out in Reuters. Hundreds of indigenous protesters enter Ecuador's capital. Things not going well for the regime in Ecuador. And also two more quick ones. BlockFi just got a $250 million credit facility from FTX, otherwise known as a bailout for BlockFi. BlockFi is one of the biggest decentralized finance platforms out there, so they can use this $250 million credit from FTX to basically bail out themselves because, remember, BlockFi is essentially a bank. They borrow crypto, they pay interest, and then they make loans of that crypto at a higher rate of interest. That makes you a bank, whether they call themselves a bank or not. That's what they are. Well, the stuff that these BlockFi platforms that they bought, these DeFi platforms, it's down in value. They still owe it back to their depositors, and they're having trouble meeting those redemptions. There's a bank run going on in crypto right now as this debt unwinds. So they took this $250 million line of credit from FTX as a way to bail themselves out. We'll see if it's enough to rescue BlockFi from going the way of Celsius and Babel and some of these other ones. We talked about Solend yesterday as another one that looks like they might be going under. But just again, I want to mention, folks, not your keys, not your coins, not a financial advisor, not financial advice, but I do not leave my coins on the exchanges. I don't touch DeFi platforms. I don't trust them. I keep my crypto in cold storage. I control it, and I'm happy with that. And lastly, I just want to talk about this one. Shout out to my man Jim over at Wall Street Silver. Posted this video today of the bank run in China. Check this out. Look at these people lined up, and they built scaffolding on the sidewalk to control the crowds. This is in front of a bank I think this is in Shanghai. And you'll see in a minute, you've got they're police officers wearing their hazmat gear and they're checking people's phones before letting them into the bank, i.e., that COVID QR pass. There's the cops in the hazmat gear there, and they got people caged in these scaffolds. Like, this is people trying to get their money out of the bank. This is a bank run. All right, it's a bank run happening in China now. China has very draconian measures in place. They control their press. A lot of information doesn't get out of there. But people lining up like this outside of a bank, this is 1929, 1930 happening in China right now. I did a video about these 6 or 7 rural banks that have already frozen their customers out. And the reason I mention this, besides the fact that China is the second biggest economy in the world, and I've been calling up for this for a long time because of the real estate collapse and all the bonds defaulting, saying that it was going to cause problems in China's banks. When things get this bad, when the public gets this angry, when you get bank runs, governments tend to take very drastic steps to control public anger. All right. And let's just say, I don't know, a war with the United States might be very politically expedient for the Chinese Communist Party right now. A very convenient way to deflect anger. And, we spent a lot of the time earlier in the stream talking about oil prices and how inflation is hurting our guys' poll numbers. Well, a war with China would be very politically expedient for our side right now and our leadership also. So keep that in mind, as I just worry what they're going to do here.
Well, I think it's important to show that this is actually spreading, right? When we talked about this last week, it was in 2 regions. Well, actually, it was in 1 region.
Yeah, it started in Henan
and then
province.
It went to 2 regions, right? And then it went to Shanghai, and now it's in Dandang. So it's spreading.
Yep. And
the information is getting out that it's spreading. And which is worse.
Even scarier is this, that China's increasingly authoritarian COVID pass, and that dissent is the ultimate disease. And this whole article here in The Spectator is about how the Chinese Communist Party is using the QR code, this health pass that flags you as a COVID risk, to restrict movement of people that are, say, posting in social media that they're going to the bank or that they're going to protest because of what's happening at the bank. They're using this app, they call it the traffic light app, to restrict people's movement. And you see it in this video. Everybody's got their phones out. I can't remember where it is, but there's one point where one of these cops is out in front of the bank and he's checking people's phones before he lets them in the bank. He's checking their COVID pass. All right? So that's one way that they can use the pandemic to try to stifle a bank run. And, well, our press isn't really talking about it because our press was pushing for this kind of garbage not too long ago. So don't look for them to be like, oh, wow, this is scary that we ever give governments this much power. No, I mean, our press wants to give the government this much power. It's stupid, but that's what they want. Anyways, I just figured the story in Ecuador, the story in China, those were kind of too important to breeze through. So I wanted to mention those before we signed off.
Well, and I would like to say one quick thing about that theory I had there at the beginning. We didn't get a chance to talk to it on this stream. I think we'll probably cover it on later streams. I went and looked back at some of those. When in doubt, zoom out, I think is what Jack always tells me.
Yeah.
I'm looking at everything since March 2020 as a blow-off top. I haven't got into it too much yet, but I'm going back and looking that if you look at the economic downturn prior to that, and then pick your favorite stock or curve, and look at everything after March 2020 as a blow-off top, it starts making a lot more sense. So we'll chat about that later.
There you go, Mish. There's your S&P chart right now on the screen. And here's your March 2020 low, right? And here's your blow-off top, and you are right on the money. That does look like a blow-off top, doesn't it? And, you could even argue that blow-off top started a little bit closer back to, say, September of 2018 with the Powell pivot. And then a year later with the repo madness, that, this whole blow-off top was really the debt crisis that started with the last round of QT when they realized it wasn't going to work. Heck, you could even argue the blow-off top started after the GFC. I mean, if you zoom out even more, right?
If we want to go crazy, we can start the blow-off top started back with the .com bubble, but
Yep, you could go to the .com bubble. That's where we're at right here. Heck, you could go
Mm-hmm.
going off the gold standing, but the gold standard. But you know what?
So I think people that think we're at 20 or 3,000, you're actually closer to 1,800 to 2,000 as the bottom, as a super grand cycle.
I mean,
Yep, right there.
I wouldn't be terribly surprised to see the S&P test this double top high from the .com bubble
Yep.
and the GFC, which puts us, more than 50% down from here. So, and we're already down over 20% year to date. All right, guys.
So that's in my head, guys.
Looks like it's going to be a pretty green day right now. The S&P is up 2.2% or 81 points. The Dow is up 467 or 1.5%, and the Nasdaq just blowing it away, up 280 points or 2.6%. The dead cat continues. Again, I do not think this rally has any legs, but a shout out to Mike Binder, who could have called that one if we had looked at the put to call ratio last week. I guess put to call ratio is probably something we should look at a little bit more often on this channel. That's a pretty good indicator that gets often overlooked. All right, guys, we've been going for close to an hour. I think we're going to call it there. Thank you, everybody, for your super chats. Thanks, everyone, for watching. Thank you to my Patreon supporters. I appreciate you guys so much. I couldn't do this without you. Reminder, my Patreon-only Zoom meeting is tomorrow, Wednesday. I haven't put a time yet, but we're going to do it early tomorrow to help out the Europeans so they don't have to get up in the middle of the night for it. And, well, Nish, anything you want to add?
Remember, spay neuter your pets.
Thanks, Bob. All right, guys, until next time, live small and dream big.
Cheers, everyone.